Welcome, Azam. We're very excited to have you here today. Today, we've been doing interviews with a lot of different angels. It started off to be in Canada, now it's become angels across North America. And today, we want to learn a little bit more about you and what you like to invest in, why you invest, why you got into this space, and we'll go into a bunch of those different details. But maybe today you can just give us a little bit of a background of yourself, where you came from, and then today, of course, where you are, and we'll go from there.
Thank you so much. The same here for having me. My name is Azam. I'm pretty new, like an angel investor. I've been in tech. I can tell you that from the day that I graduated from university, because my background was back to computer. And after that, I moved to business. I understand there is something in business area. So I started to, like everyone, with working in the corporation. At the very moment that, back to 2013, that we started our first business, which was a mobile application ride sharing, and all of this journey started, and it was too much the excitement moment, and also too much lesson learned. So I started to jump into this ecosystem. I'm super happy, to be honest. So far, have been a lot of up and down, as you know, that the nature of a startup, how is that? But in general, I'm very excited to take a decision in order to move to this area. So I'm here and open to answer any question you may have.
Awesome. So you mentioned that you're kind of new to the space. So what got you interested in startups? What kind of pushed you or changed the whole mindset from going corporate to something small?
Yeah, you're right. So the point is that, as you may know from investment point of view, probably investing in a startup, especially for the people that, they are safe in a corporation side, is risky. The majority of the new companies and the new products simply don't make it because there are a lot of reasons why, and a lot of competition in the market, especially in North America. But, to me, it's more than dollar sign, because, during the past experience that I had dealing with investors, and also, trying to build trust with them to invest in my dream, was kind of challenging, and too much stress and too much lesson learned. So, and the very moment that I was thinking, if I can make our business successful, and if I can be, safe from a startup ecosystem, and one day I became an investor, I try to see the soul of a startup and entrepreneur, as I expected from the beside of the investment and the money and all of this conversation and the cap table and all of the financial information that majority of investors, they are thinking about that. Someone see the soul of the people behind of that and support their value, and also the self-sacrifice that they did in order to build something matters to them and their society. So that is the main reason that I decided to become an investor.
Well, that sounds pretty exciting and a good way to do it. Yet you wanted to learn both sides and then figure out how to help a startup balance what they're going through to get funding. You mentioned that what you were looking to do is you're getting people to invest in your dream. So maybe you can explore that a little bit more with us, because I'm curious to see, was there something that you did to help de-risk the investors so they would want to come into your dream? But how did you get them to do that? And what did you start to see throughout this journey of convincing investors and de-risking the whole opportunity so that they'll want to invest? Is there a tactic or a trick or something that you've learned or you've done over time to get investors ready for this? Because now you're an investor, so you're investing in other people's dreams, right? So is there something you did to get people to help you?
To me, and based on my experience, a startup is a dream game. Of course, there are a lot of items behind of that, the market and the idea and etc. the team. But the point is that the person is going to build something and start to dreaming about building something. All the game started from that moment, and how much this person is, serious about this game. So for me was that, when we want to start from, because the first application that we have started, it was a carpooling application, mobile application back to 2013. Uber came up to the market, a lot of stuff regarding to technology and with the traditional, the ecosystem in the market. So we're dreaming about, okay, let's make something customized based on the specific market, because we have started from Latin America, and how is the market of Latam? Is that completely different structure and the people and culture, etc., and also different needs. So when we started to build this dream and adapt it, with the North America, mixing of these two, we have seen that, and started to relearn that we have to talk at some point with the investor, because at first we just count on ourselves and dream and the money and the fund, and we invested a lot and risk, to be honest. That's why I told you that about the sacrifice. So we learned that, okay, at some point, since the business goes very well, is the momentum that we have to bring investment and also this gold player in the market. So we started to communicate with them. We understood at earlier stage, especially we didn't have any experience to become entrepreneur. So at first we have seen that we are not prepared for that. So we have to deal with them. We have to sell this idea. They have to trust on us and trust on an idea, beside of all of the elements that we have tried to put on the right place. The team, the projection, the model, etc., etc. So all of our relationship, or the secret sauce that we have, it was the personal connection and the trust that they made on us, because they have seen us that we are, fully 100% dedicated for the business, and we have seen that some things, it has a purpose for us. It was not just, let's make something, because that moment a startup and this idea came up and everyone wanted to try it. So it was not that. It was a serious job for us, 24-hour, all of the family, everything, the financially focused on that to make it happen. And actually, I can tell you that we made it happen. But the point is that the challenge for investors, especially for the venture-based or venture-backed investor that we have started to talk to them, it was seriously, it was too much stuff regarding the trust, regarding who we are, regarding how we are going to do that. And that is something I can tell you that it is what drove me in order, to, if one day I became that kind of angel investor or investor, try to see the other side of the game as well, because if you have a good team, if you have a proper business model, the rest is done. Execution, these people that they are making too much sacrifice and risk, they can make it happen, even though if necessary, they can pivot and change the business model. This is not the big deal. The team, who they are, stay for up to end, So that is the kind of, I told you that regarding to the relationship with the investor, that it's good to build that at first, and after that, the rest of the items came up.
And that's some good advice. And I think you kind of rounded out a bunch of different things. And I think you're really looking at how you de-risk the business again is the biggest thing for the investors, so that they'll have interest. You've got the right team, you've got the right product, you've got the right drive, you're working 24 hours a day. It sounds like you've kind of full rounded all of these things that you do and you did in order to get the investors' attention and get them feeling comfortable with what you guys were doing. You mentioned one thing, and I think it really stands out, and maybe it's something that doesn't get talked about a lot, and that was count on ourselves. And you mentioned that you got to count on yourself. And it's interesting you say that, because I've never actually heard anybody say this when it comes to a startup, but that's believing in yourself and driving that business and doing all these things that really get behind what you're trying to achieve. And then finding like-minded people, like you mentioned on the team side, that get behind you. Is there a certain trick that you might have, or a way that you can change your mindset so that you can tell other founders, hey, you got to believe in yourself? Is there something you got to do, like write it on a wall, like believe in yourself, and then everywhere you wake up and you read, believe in yourself? Like, what is there that you can really get some of these startup founders to start to understand that they're doing something great, but it's going to be a tough slag to get through it?
Actually, I think everyone has their own formula. That everyone has a user experience during the years that they live and they work and etc. So everyone has their own way or the philosophy for that. But for me, because when we decided to start that, thinking about this journey and this idea and this model, it started before funding up the company. It was like 3-4 months. We try as much as possible. We get some advice, we talk, we research, we did our due diligence before even funding company, to be sure that this is, because we are supposed to put the 100% of everything on that, the time, the family, the money and everything. So we have to be sure there is no way back, we have to just go straight forward. So there is no way.
All in.
Yeah, we're all in. So for that reason, that is the reason I say that I put myself and all of the experience and all of the skill that I have there is no perfect person, even though in the investor side, there is not perfect. You should be perfectionist, but there is no moment that we say is done and is over. You have to always, look for more and more and more, because this space is unlimited. You can do as much as you want. You can even do in the business side, in operational, in investment side. So that is, the secret sauce, or the reason why is that I did by myself in this, sit down, have a privacy and think 3-4 months, gather all of the information is required, do diligence personally about it. This whole journey is not about the just idea, because sometimes idea make you poison your mindset. You cannot think, so you think that this is the best and brilliant. To be honest, there are a lot of brilliant ideas in the world that a lot of them they could be successful. A lot of them they failed, even though that the idea at the moment and the time was brilliant. There are a lot of factors or criteria out of your control. Even the luck, sometimes luck is very important too, at the right moment, connected with the right person, or do the right things or changes in product. So for this reason, before that, you have to settle down and take a decision. If you want to get in this game, this is all in, so always you have to think there is no way back. So that makes you, push you, motivate you to go through all of these up and down situations that there are a lot. Yeah.
Well, I like that. It reminds me of a line I always use when I'm explaining this to other CEOs or other company members, is that I have to live on the brink of destruction every day. I have to think to myself that if I don't do this, nobody else will. And it has to motivate me and drive me to make sure that I do this, or I'm going to fail. And, they talk about failing fast and everything else, but to me, it's not about failing fast. It's about envisioning where you're going to go and how you're going to get there, and that taking no for an answer and making sure that you can't fall back, because if you fall back, there's no one there to catch you. So you really do have to push yourself and find ways to motivate and get yourself driven to say, you know what, I'm building something and I'm going to make this work. And you talked about when to bring investors into your business. When do you feel that your business is in a good spot, a good position? Is it based on revenues? Is it based on team size? Is it based on burn? There's a lot of factors that go into de-risking your business, but there's also a lot of factors that would go into regulating where you feel you're at a good spot that you should start looking for dollars. And do you have a formula, or do you have anything that you gauge where you see a company, you're like, you know what, I love where these guys are at, I want to go in and invest on them, or I want to work with them? Is there something that you put in there, and then those people know at that same time, hey, we should be getting investment because we're at this right stage? Is there something that you have as a measure for that?
I think there are. The only thing is that see this process from the entrepreneur point of view is a little bit different from the investment. From the entrepreneur point of view, the way that we did it was, we have go further. We put our personal financial money, and also we developed the product. Product was completely ready, was in the market, the beta test was done. It was the numbers financially and the operational wise shows that there is a growth and we can reach to the steady growth. So that was the moment that we as an entrepreneur see, okay, now is the time to bring others to this, to share this story with them. But this is from the entrepreneur, because you want to be sure that everything is in the right point. So probably we were not in the best situation for the legal point of view, because they are coming and this due diligence process, and we were not documented enough, because this is a game of all of this paper and etc. So of course, with the help and support of them, and with a lot of meetings with the investor, we understood that this is wrong or this is right, and we have to have this information otherwise. Because when we were sure about the business itself and the operation itself, it was a time that we reach out to the investor. So this is a view of the entrepreneur. From the investor point of view, I think the way I see is that, first of all, at the beginning, I check who are these funders and how much they are serious about this. Do they see, if they are young, just graduated from university, this is very good. They are young, smart, and they will bring their smartness and brightness to the market. But the point is that this game do need maturity a lot of time, So they are prepared for that, a lot of stuff that is going on or no. And after I see the funder group, I checked, the business model itself, the idea, especially because right now there is a bit too much competition in the market. There are a lot of brilliant idea, but it's enough. It is good to have it, but it's not enough. So I checked the business idea. Is this idea scalable, strong enough in order, to invest on that in the long term and build it and change it and etc. So something like there is a real and actual needs in the market. The afterwall, even though if they're in the early stage, it's too much risk from the investment and money point of view. But sometimes if the other elements they are properly, pointed, okay, it's okay if it's early stage, because early stage also has a lot of benefit for the investment point of view. Is a team, they are proper team, and the business model and idea is a scalable and strong enough. Okay, it's good that there is not traction yet. So after the beta test and etc., all of the, the quarterly or any milestone that they have, you can see that, okay, it has enough value in order to back again, reinvest, or pause investment. Do not take a decision about investment and back to them in a month or two, especially because of the COVID. But you can see that this practice is repeated a lot. So back to them to see if this cycle, it's worked properly, this cycle is complete or not.
Well, and that's full rounded. I like that. You're doing a lot of things to verify if that company is ready, but at the same time, you're seeing is the company de-risking or reducing the risk in the avenue to allow you to come in to invest. And are they doing the right steps from business plans and modeling and setting up the revenue structure for you to see that there is a movement going forward, because you're going to invest early or you're going to invest late. So that you can come in at any stage, but as long as they're lining this up and continually updating everybody, there's going to be some value for you. I guess when you've gone through this whole picture, you're working with the startup, you're getting a good feel for what they're looking for, what they're able to do. Is there anything that you see from your business standpoint or business background in a tech or whatnot that you look for, maybe in the owner or maybe in the team, or is it in the product? Do you focus just on tech? Like, is there something that you structurally are looking for that will really help you get to the other side and want to make an investment?
Actually, as I mentioned, is a mix of a lot of elements, but more important is the team. It's the funding and business lead or leader teams, because they are going to execute it. They are going to, dealing, communicating, and building something. This is the first thing. The second one is the business model itself. So business model has something, and innovation wise, or even though from the needs point of view, is there any real, or is just bubble or something like, most of the startup these days, they say about the AI, but AI, machine learning, they need time, they need the data. We are talking about the big data and etc. So, that part, it's like a nice to have, but the core of the business as a business model have to make sense. And there is a need for that. They are solving some sort of real problem. This is the second item that we consider that. And the third item is that, the rest, how is the projection? If it's early stage, okay, how is the plan? They can planify like in 3 years, because after that, if they are a proper team and the model itself makes sense, they are the people that they can turn the pitch to something, tangible. So this is the third part, is attraction. If already they have a beta or etc. If they don't have it, do they have like a three or four? Actually, it's 3, I guess, is enough for us, because the dynamic of the market is too much. So you cannot say like a 10-year financial projection doesn't work unless you want to make the second round of investments, and you want to see that if they are, accurate enough in the first. How is their projection? You want to evaluate the projection versus the model itself. Yeah.
And are you looking at, when you're working with companies, do they need to be post revenue? Do you want them to be in revenue before you start working with them, or do you look at them after?
Ideally is having revenue, even though the point is that, revenue has a one sign that this cycle that the owner or the founder that define, it works. Is it perfect, or is it not? Down the road, the time and etc. and the asset and all of the resources is going to prove that. But the point is that if you build something, especially unless you are working something in the long term, like a more R&D based, like if you take and etc., that you do need like a research in the long term, 3, 5, But for the, especially for angel point of view, or from the early stage investor, if you make something that can generate revenue, I mean, all of these dots is connected and makes sense. So it's a good sign. You know, after that is a challenge, how we can make it double, 3 times or 4 times, and etc. But if it's, I mean, early stage from the, I mean, the idea itself and the development itself, you can be like, we had a, like, for example, a startup that came to the group, for example, they have been like 4 or 5 years in the market, and they call themselves, they are not early stage enough, and they didn't have any revenue. For them, this is the sign that this model is not working, or this call all of this cycle and these people together, people, resources, technology, etc. There is something wrong there, you know. So that's it. There is a yes and no, but case by case is different. But in general, if there is a revenue is a good sign. So you can see that this is, you can boost it, and with more money, more investment, or more networking, so it's going to be, you know, reach the growth, or etc. It can be successful business model. Yeah.
So revenues, they're going to help because they help proof that the market is there, that there's a value. I liked your 3 items of, are they solving a real problem? Do they have a strong team supporting the product and behind it? And have they planned and balancing their risk, not just now, but in the future? So yeah. I think those are 3 great things. Now, when you're talking about balancing and planning risk, and I know we were chatting about this before, and it came up as kind of a hot topic, but we're in COVID, out of COVID, playing inside of this mystery box. Is there something here that allows, or that you will work with startups on how to actually de-risk or balance themselves during COVID? Because their business might not be relevant, or their business may be super relevant, and there's going to be risk factors on all sides. So is there any things that you provide to share with startups on how to better balance that type of risk and adapt during this time that we're going through?
You know, you're right. You know, COVID almost changed all of the calculation, the growth that has been in investment, especially from the Angel and Angel group in 2019. It was completely different with the 2020, not because of there are not enough good idea or the new startup, is because of the disease, but like unexpected situation, you know. And you can see that I've seen that a lot of, you know, Angel groups, they are moving to the stock market in order to have a more balanced investment probably, but the other one is still they try to commit it or return some of the value that already generated through this market, you know. So that's why COVID a little bit changed the market from the way that I see that. But, you know, for a startup, I think in order to, you know, to pass these days and to reach to the point that they are, you know, they can mainly focus on the business, not like all of these unexpected situation that happen, is that to first of all is manage the cash flow. It's very important, you know, because now in the way we see that in the Maple also is like this, that we do not expect it to see a sort of with the reasonable number of revenue or the, you know, the big traction, but we are looking for the one that they can manage this kind of situation financially in the reasonable way. I mean that cash flow management, increase the runway, or do not expect it to do, they do like a pivot or dramatical change, because, you know, there is no enough sign in the market in order to that this business model or this product or this approach is not going to work, because all the market still is in shock. So the only thing is that they can, first of all, they can manage and pass this stage to the communication, team management, etc. That it is a sign of, I mean, how much mature is the founder. The second one is that they can survive through the, I mean, the already cash flow that they had, or through the connection, the government fund, or any sort of sourcing that already they have activated or still are active in the market. So this is the other skill, but again, back to the founder, that they have that financial, I mean, the maturity regarding P&L, and they can, you know, pause for a while in order to see how is the market and back to them. So it's a skill to, you know, control and manage this cash flow.
So it kind of really does come down to managing your cash flow, your burn rate, your run rate, and then trying to figure out how you're going to be able to survive in the next 4 to 6 months or longer. And that could be diving in and learning a bit more about government funding and support, so non-dilutive funding that can help you. So it really comes down to is that it's a real financial burden. You have to really hone in on survival, and survival means keeping the cash close and utilizing and paying for resources that you need in order to grow, and not the reverse, not just stacking a team just so that it looks good if you're not going to be able to generate sales.
Yeah, you're right. You're completely right. Yeah, it's the same.
So is there something that this kind of takes you away from a company? Like you've talked about how you de-risk it, how you find things that you're looking for when you want to make an investment, that they manage cash flow, that they're challenging, they're finding out what they want to be, where they're going to go, they're solving a real problem. Is there something that distracts you from wanting to invest in a company, like things that you don't think companies should do? Like just a couple of points that, don't get a board when you first start out. It's not something that's really needed. Maybe wait a year. Let your company get to a position where it's growing and it's learning, and then bring a board on. Is there little things that you think that companies shouldn't put a lot of focus on because they're trying to get at least a position in their business to move it forward? Or are there anything like that that you look for that you would say, hey, you're doing too much, just do this?
It depends on the company and the stage that they are. Especially for the company just funded, 2019, or they're early, or the founder are fresh. We recommend them, especially when we see them, they haven't still understand how is the situation and how risky is that for in order to survive in this market. And so they are, hiring a lot of people, or advisor, or kind of director, I can call that. They are well known, and they are expensive, and too much commitment because there is no clarity about the long-term and mid-term future. So if they are signed up with this kind of not wasting money, is like risking their burn rate in a short term. If they are these kind of companies, or the one that they are, they try to invest a lot on the product. That especially the tech company, or when the founder is a tech oriented, they are playing with this product and the technology side of that, because if you want to, for example, if you want to make something like AI based, and you have like you're hiring the tech guys are very expensive, and they are very talented as well. So if they are investing in early stages in AI, like a special kind of, a specialist, or the developer, etc. And for that moment is not matched with the situation of the company, or even though they are investing in other side, the side business like administration, operational, etc. So this is not a good sign. They are not probably they're going to survive in this situation. So the resilience one, the one that they can stay in the market, they can be more wise, and this is a time of to be more logical than emotional. They are the winners. So definitely you are not going to risk on them, and definitely they are going to receive something message from the investment market that they have to learn how to manage this stuff. Even though they want that, because we have some of a startup at the moment that they wanted, everything was established properly, and it was the moment for to boosting the business, because already they have had a steady revenue. So COVID hits. So this is a matter of the team management, communication, and etc., and changing the plan. So one of the founders that we knew that, and it was like the reason why that we paused a little bit investment was because they couldn't manage this kind of crisis. You know what I mean? This was too much for him in his plate. So he had enough time. There were a lot of intercommunication issue between the team member and etc. and the company, and money, time, etc. So we pause on the investment. So the case such as this one, yes, is a kind of blocker. Yeah.
It's interesting because I like that you said be logical and less emotional. And
this time,
it makes a lot of sense that sometimes we become too caught up in what we're doing, too emotional, and we forget that there's actually a logical way to get around the problem or to move it forward. So I really like that line. And I also, I like that the points that you brought up, they're very accurate to the fact that they go back to your bottom line again. And I think a lot of startups, what they do is when they start to get those funds and they raise, they start to feel I need to hire everybody. And they forget that they only have so much money. Let's just say they raise 500,000, but they feel they should be a team of 10, but they could probably accomplish what they need to do as a team of 4 instead of a team of 2. So they've upped their game. They brought in 2 people, but they focused exactly what those 2 people's roles were to offset maybe the workload, but increase the revenue load. So a lot of it goes back to focusing on the sales side. And other times companies will go into that heavy build. Like you said, they're going to start doing tech like crazy and thinking they need every bell and whistle. And I think a lot of the times they forget that those bells and whistles confuse their audience. and that they need to slow down the release process of what they're doing with their product, because the more clients they bring on, the more things they're going to get feedback on what's actually missing or what's needed from a tech stack standpoint. And then that again costs money. So there is a slower approach that allows you to learn the space you're in, and a bigger approach that brings those revenues in to support those next growth and changes. So I 100% agree with that. And I think that that's fabulous, because I think a lot of times startups get too excited about the product and they forget that they need sales, and they need to do everything in a tactful way. Just like they were able to raise money tactfully, they need to take that and use that against resourcing and planning and structuring of their business. That was good.
Yeah.
I like that.
Yeah.
Very good. So is there, in the time that you have been investing, is there been a story or an exciting moment that you've been part of that you really liked and said, you know what, this startup came from this? I heard about them 2 years ago, and then when we got into them and started working with them, I really saw them, blossom and bloom into something great. Is there some exciting story that you want to share? I love stories, so I'm looking for one of those exciting startup stories that you've been part of, or that you've heard, or whatever, that can really just emphasize kind of the way the market works and where the downs and ups, like you talked about, can fit in. Is there something there that you want to share?
The point is that, I'm pretty new in the investment side. So for me, is still is, discovery and listen. And, you're right. The story of the people, each startup, they have their own story. So we have been a story of the startup that, they came with a very funny, very entertaining business idea, and they jumped it in 2 years. And after that, because of some, not proper modeling or financially modeling the business, they were to the moment that they wanted to shut down. And the last moment, the one lead came up and they trusted him, and, the company again. But the good thing is that the company again stand up and, back to the, not the previous point that they have been, but the point is that they knew with this injection that is, to be honest, it was trust on the people, because the business model was completely done. So with that, the new injection, the new money, they changed the business model very, very conservative without damaging the user experience that they already have and created for the user, and they boosted the game. So still they try, and the COVID a little bit hit, but in a good way, because it was like an entertainment platform. So in the moment that everyone said that probably they are not going to, back again to the market, the COVID a little bit helped them, because the people had a more free time, or more, probably they need more entertainment or to be entertained. So, and also that trust that came from the close kind of referral investor network helped them to, to boost and back to the game. So for me, everything, all the story is new. I cannot remember right now the one that it is like Azam or something, that it's the only things that came to my mind now was this company. That, yes, the mixing up.
That's still pretty cool. Like, they got to the brink of, we're going to fail, and they were pivoting and trying to change, and then someone kind of fed them the lifeline, and they turned it around. And that's a good pivot and a smart play. So sometimes you got to be on the sinking or swimming or something, and then you got to get to the shore, right? So eventually someone gives you a life raft, or you make your way there yourself. But it's good that they were able to get some help and they turned the business around. So that's exciting. Yeah. That's very exciting.
Yeah, but it came from the referral network. The things I have seen that it sometimes is do the magic or that secret sauce or something happened last moment. It was like trust on the business community or the investor community. Sometimes this group, like Angel Group and the Mars and etc., the people who are behind of these names, sometimes they are playing the very important and significant role in the success of some startup. That is very important to mention that, and it's good that we have this kind of supportive community in the market, and they can support the startup in the momentum that they need. That, yeah.
Well, before we jump into the rapid questions, just because you've mentioned this a few times, and I really do like it, you mentioned a lot of the trust factor, and I think it makes a big difference to an investor for sure. And companies really do need to figure out how they de-risk it, but get themselves into a trusting position. So do you recommend that startups spend more time reaching out to the community, reaching out and trying to talk to all investors that they can talk to, and really turn that into a job, like, or at least a really full-time role? Do you recommend that that's what's needed if they want to be successful? Is basically trying to streamline that story and really get it isolated down and get as much feedback as you can from everybody? Or do you look at it being, you know what, only find investors that fit into your realm of investing? Like, how do you recommend from what you've seen on that side?
At least I do recommend that, you know, to protect or define a strategy in order to protect your IP and your idea, because you know that how is it this market and how competitive is that. After you're sure about it, you are safe and secure, because this is giving you the advantage in order to be in the market and all of the revenue and all of the strategy that you have learned in the years. I believe that the opportunities is everywhere. So if you want to be succeed, you have to, you know, look everywhere. Especially, you know, because at the end in the network, you have to be connected enough, or you have to look for the people that they can may help you. Probably the reason of this kind of, you know, looking around is that you will hear a fair no or negative or rejection, which is good, because for every kind of, I mean, every person has a different point of view, because they are, especially in the angel groups, because they are investing their own money. So everyone has their own criteria in order to invest. So more rejection, more lesson learned, in order to prepare yourself for your momentum to, you know, to be connected to the right person, which is the right investor, to understand all of the business model and you and the team and etc. So for this reason, I do recommend, especially because I've seen that for the, I mean, the mature entrepreneur, they are the people who are, I mean, getting more rejection than acceptance, you know, because accepted, even though sometimes you don't get too much money, but give you this feel and this bubble that, you know, everything is fine and there is no problem. But the reality is that there is no perfectionist in this game. So as much as you can prepare yourself, as much as you are prepared financially, business model, etc., you will have a more chance in the future when there is momentum that you are sitting or connecting with the right person or the right group, and you're going to in 10 minutes take a decision, yes or no, you know. So this, all of the momentum and how much you are equipped for that momentum is came from this kind of networking. So I personally, to me, is that, you know, reach out everyone, opportunity everywhere. Do not be, you know, disappointed. Do not be, I mean, keep yourself motivated, because, you know, even though, especially angels, if they say no, there is no meaning and there is no reason that you are not probably you are not matched with all of the, I mean, the portfolio he has defined for himself or a strategy, you know what I mean? So there are other opportunity, and it's a matter of practice to, you know, to find yourself in this ecosystem. So I recommend it to go everywhere opportunities there. Yeah.
I like it, and I wholeheartedly agree with that. That, you know, you might pitch 50 and find the 49th, 50th person has an interest in your product, but the first 48 gave you a lot of negative feedback or didn't like it. But all of that information is what led you to get that 50th person or 49th person to close. Because without all of that previous information, you wouldn't have got better. You wouldn't have been continuing to grow your company. And from the first pitch to the 50th pitch, that could have been 3 months. And the growth that you would have got just from all of those people giving you feedback is huge. So I love that you got to get out there and pitch everybody. It's a full-time job. It takes a lot of work.
Yeah, it is.
It pays off. Eventually it will, right? We had one guy that we were working with. We invested in one of his companies, and I think he said he kept a spreadsheet of all the companies he pitched, and it was something like it was a while back, but it was something like he had pitched 480 people.
Probably, yeah.
To close off 20 people. So, you know, it takes its toll, but at the end of the day, he learned a lot and you grow a business from it.
Yeah, you're right. Yeah, completely is like this. Yeah.
All right. Well, we're going to jump into, we've probably one or two more questions after, but we're going to jump into the rapid fire questions. So in the rapid fire questions, I'll ask the question and you can just quickly give a yes, no, 1, 2, 10, whatever the number of questions is. But we'll just do those quickly if that works for you.
Yeah, sure.
All right. So, well, we didn't ask you what your favorite part of investing in startups was, so we'll ask that after. But, okay, first question. How many companies or dollars do you invest per year?
Okay, I mentioned that, because I'm early. So
Yeah.
for me, it's more about the learning of the ecosystem, and after that investing. For the first year, because, I invest through Maple Leaf Angel. So for the first year, it was like a 1 or 2, and down the road, based on the, experience I get from the market and how is the formula and how is the proper numbers, because you don't want to make it too much risk. At first, you want to learn more. So I go like a double it, or even though sometimes it's more. So I'm in this stage. At the current situation is like I want to stay with, especially for COVID, I want to stay like a 2 and 3, and then let's going on what's happened and how is that. I do my I do my best in order to commit it to the community, So let's see how it's going on. Hopefully everything goes well. Yeah.
Nope, that's perfect, and it's the best way. The last thing you want to do is go all in and then find out that it doesn't work, and then you're not really working in the space anymore. So nobody wants that. So being a programmatic approach is brilliant. Have you done, or you're looking forward to doing any follow-up investments in the companies you're in?
No, for me, it didn't happen. But the point is that I do trust on that if the company has, especially because nowadays, because the one that will perform better, they are less risky, because the team, you already go through all of the process and you did the due diligence. So if this cycle is okay and it's working and they have they reach and hit the milestone, why not? Because it is riskier, less risky than, invest in a new company and go through all of this process and you build a relationship and the trust already. So definitely yes, but so far, no, I haven't had the chance to, to reinvest, yeah.
Any notable portfolio companies that you'd like to share? Just the name or the interest in them or the value. You don't have to do all of it, but just something that you find that you like about them.
The tech ecosystem is broad, but I personally, I like, because I believe on the digital side of the business is going to change. So I think I'm looking for the e-commerce. I'm looking for the clean tech, anything AI based, machine learning based. I think is a good spot to dive in. Everything that it is has some social and benefits for the people and even for the society. I guess is good to go there, but not a specifically specific sector. No, I'm very open, and any stage definitely. I don't have enough money. Sorry.
You're a generalist. It's perfect.
Yeah, because still I don't have to. So I try to reduce the risk as much as possible. Yeah.
Okay.
Do you have any there are good shot as well. Yeah.
Okay. Do you have any preferred terms?
Common share, convertible note, something safe and risky. And to be honest, it depends on the company and maturity of that. For earlier stage, I feel like it's more negotiation. How much do you connect it to the team and the founder? And after that, you can figure out how is the process. Yeah.
Okay.
And if I can add something like a value to the team and etc. Of course, to be like a part of the team as well. Why not? Yeah.
Do you have a timeline for your investments? Like you like to work with a company for a month or 3 months before you make an investment?
For us, since we are part of MLA, so they make our life a little bit easier because they do diligence and love this process. They are huge help, and also we have this kind of network. And for me, it's more like my personal due diligence process in order to get to know the team, how is their skill, etc. And they are matched, or I can add some value for them. So not very specific timing, depends on the case and sometimes I love the idea, but sometimes, it's take a time, 2, 3, 4 months. And after 3, 4 months, you see that, it's not the proper match for two sides. You know what I mean? So it's case by case is different. Yeah.
Okay. And you take board seats?
I love to do that. If, we are proper match and I can personally add value and they are looking for something like advising, or someone can help them in order, to boost their business, to bring more, community to the game, or bring any other knowledge, etc. Yes, definitely, I would love to be part of that. But because I see that as a job, it's not like you want to be mentor, because board seat is not mentorship. It's you're part of that game with them. So it's a little bit more responsibility. So if I select a company, or we have selected both sides, they agree to work together, why not? And I do my best in order, to generate any value for them.
Perfect. And is there any other ways that you mentioned a couple of these, or any other ways that you like to help startups outside of just financing? Like, will you join the team, work for them?
I do love, yeah. Yeah, I'm an entrepreneur. My background, I came from that sector as well. I've been there fully 100%. So sometimes even though that it's not my part, or because of any reason, or even though they are not in the stage that I can help them financially, I try to connect them, and I do that, connect them with all of the resources. You've seen some of the examples that I send the startup to you, because I believe there are some value in the team or the business idea itself. So yes, I do my best to mentoring them, helping them as much as I can. Yeah, definitely.
Brilliant. I love it. Okay, so that's the rapid fire questions. So one last question for you is, in your crystal ball, where do you see the market going in the next 12 months and 36 months? And what I mean by that is, based on COVID, as we move our way through, do you see everything opening back up and more investment going into startups, and what sectors? Or do you see that the investment for the next 12 months is going to be reduced and only here, and versus in 36 months, you think it's going to blow up? What's your kind of crystal ball telling you that all of the startups out there can look forward to?
I hope I had that answer, accurate answer. The point is that, the global picture has been a little less positive, but always there are a lot of opportunity in the momentum such as this one. I think I see, as I mentioned to you, I see some move in there, online businesses, especially, the rise of, from the customer point of view, from rise of, Gen Z, that they are, expecting to respond in the moment need. I think they will affect of the digital, especially because most of the company or most of the businesses came to digital, but this digital structure, just having the website, etc., doesn't have is digitalized. So I see that some move in that area, some new technology and something will come up to this area. And definitely because of the COVID, there are some kind of attention to health space, biotech, and because they are kind of problem solver and they are looking for some issue and the problem. I've seen that, but investment, I think, is going to, I feel like especially in the group and all of the close community that I have, I see that it's a little bit slow and conservative. So I don't think so it's going to have the same speed of last year, but quarter by quarter, based on the progress of the general economy, is going to, you see something like a good news about investment. But see, but the point is that, some part of the market, such as I told you, the biotech and something more health oriented or so before they haven't had enough attention, probably was not fair for them, and now is the momentum that they came up, so is like a other side of the sectors is going to be more balanced based on the needs on the market. But definitely digital, everything is going to be digital, and the business who are helping or ease this process, they are going to be the winner for both parties. Yeah,
keep it digital. I like it.
Yeah,
good. It's good. Yeah, and there's a lot of change. So I guess the final thing, even though I said that was the last question, what's your favorite part about investing? And I give you the last word to say whatever you want to share with the startup community.
In order to share with the startup community is that, everything is very tough. You have a more responsibility as a founder. Before, it's one of them is to manage yourself, your family, every beloved one. The other things is that the other baby or the other dream that you have built, and you take a decision in order to make it happen. So you have to make imbalance between two. Now, right now, if it was before, right now you have a two responsibility, two things that have to be is in your hands. One of them is that your personal self, how you're going to manage yourself and others, and the other one is your business and the people who are attached to that business, from the employee, colleague, and etc., and even the investor. So it's not going to be easy job. It's not going to be any secret solution or secret sauce. You have to just be resilient, to pass these days and stay with the idea and stay with your dream, because these days will pass. And so let's see how it's going on, and let's to be efficient and reasonable as much as we can for the momentum and the momentum. Yeah, but there are a lot of people in the community that can help you, unless you have to reach out to them. It's not the time to stay. You have to be extra double to be superhero, what I mean, for yourself and for others. So there are potential help and support in the market. Just you need to show that you need help from the advising, mentorship point of view, and even though investment. Yeah, this is the last thing that I can tell them. But I know it's not going to be easy for a founder and a startup. Yeah,
I love it. Well, You sound like you've got it. You're very passionate and helpful with helping startups. I took lots of notes, which I love to do. So it was a great conversation. I think you shared a lot of great material for startups to listen to and to better understand how they should be risking and going through business. And I love the last line about being resilient and asking for help when you need it. Don't be a superhero. Balance
Yeah.
life out. And I think we all have a tough time doing that as entrepreneurs, but I think that's some great advice. So Azam, thank you very much for all of your time today. I think you did a fantastic job, lots of great information, and we'll call that a wrap. You got the last word, so thank you.
Thank you really so much for you and for your support for OPN. Always, you know that always when we need you, I just send a message in the LinkedIn when we connected. Thank you so much for having me. And with having the people like you active and committed, more important, is committed to this community for in the up and down. This community is going to be, I mean, growth every day by day, and it's going to be unique. Thank you so much for your time. Yes, have a great
You're
time.
the best. Thank you very much, and we appreciate your support too. So
thank you so much. Bye-bye. Have a good day.
Have a great day.
Bye.
All right, that was awesome. So I think we got a lot of great information. Just to throw out a couple of things, man, huge. Like, I love the be resilient part. I think that there was a few times that's come up, but really being resilient and taking care of and balancing life, your colleagues, your investors, your family, it's a lot of work. But man, when you get in there, if you need help, reach out. You don't have to be a superhero just to be able to take care of your business, but there's a lot of people out there that'll help if you ask. She provided a lot of great information. I love the things about derisking it and it's about team solving a real problem and then balancing that risk. So those are great 3 things that she talked about. And I think overall, you really have to figure out how to balance that cash flow. And she mentioned that a few times. Hire the right people at the right time. Don't get stuck in the dev cycles. Balance your product, get product fit, and then start to grow your sales. So Azam had some great value to offer. So thank you very much, Azam, for all of your time today. It's been great getting to learn more and work with you. So keep up the hard work, and everybody else, great job. Thank you for joining us.